Welcome to Module 2, Credit Builder Loans. Now, I'll be honest with you, when most people first hear about Credit Builder Loans, they're confused, and I get it, because the name sounds backwards. You're probably thinking, if I had good enough credit to get approved for a loan, I wouldn't need to build my credit in the first place, right? But here's where Credit Builder Loans are brilliant and completely different from regular loans. With a traditional loan, here's what happens. You apply, they check your credit, and if you're approved, they give you money, and then you pay it back over time. With a Credit Builder loan, it works in reverse. You apply, they approve you regardless of your credit score, and they do not give you the money up front. You make monthly payments, and at the end of the loan term, you get access to the money you've paid in. Think of it like a forced savings account that builds your credit at the same time. Here's exactly how it works. Let's say you apply for a $1,000 Credit Builder loan with a 12-month term. The bank or credit union takes that $1,000 and puts it into a savings account or a certificate of deposit in your name, but you can't touch that money yet. Then you make monthly payments, let's say $90 a month for 12 months. That $90 includes the principal plus a small amount of interest, just like any other loan. Here's the key part. Every single month, the bank reports to all three credit bureaus that you made an on-time payment on an installment loan. This is building your payment history, which is 35% of your credit score. Now you might be thinking, wait, why am I paying interest on money I don't even have access to? And here's why it makes sense. The bank is actually taking a risk by reporting positive payment history for you before you've actually proven you can pay back the full amount. They're essentially vouching for you to the credit bureaus based on your monthly payments, not your past credit history. The interest rate on a Credit Builder loan is typically much lower than credit cards, usually between 6 and 16%. And remember, at the end of the term, you get back the principal amount. So if you borrowed $1,000, you'll get $1,000 back minus the interest you paid along the way. Now, let me give you a real example. Sarah had a 580 credit score and couldn't get approved for a regular loan or credit card. She got a $500 Credit Builder loan with a 12-month term at 10% interest. Her monthly payment was about $44. After 12 months of on-time payments, she got her $500 back, had paid about $28 in interest, and her score had increased by 45 points. That $28 in interest bought her a 45-point credit score increase. That's an incredible return on investment. The reason Credit Builder loans work so well is that they prove to future lenders that you can make consistent monthly payments on an installment loan. This isn't just theory, this is actual payment history that shows up on your credit report every single month. The mechanics and benefits. Now let's get into the specifics of how much you can expect to borrow, what you'll pay, and how much your credit score might improve. Credit Builder loan amounts typically range from $300 to $3,000. Most lenders offer terms between 6 and 24 months. The sweet spot that I recommend for most people is a 12-month term because it gives you a full year of positive payment history without stretching your budget too thin. Let's break down the costs. If you get a $1,000 loan at 12% interest for 12 months, your monthly payment would be about $89. Over the course of the year, you'd pay about $65 in interest, and at the end, you'd get $1,000 back. So essentially, you're paying $65 to build 12 months of positive payment history. When you think about how much a 30 or 40 point credit score increase could save you on a car loan or a mortgage, that $65 is a bargain. Speaking of credit score increases, let me give you realistic expectations. Most people see their credit scores increase by 20 to 60 points over the course of a 12-month Credit Builder loan, with the biggest improvements happening around month 6. Now, that improvement isn't just from the Credit Builder loan alone. Remember, you should have already implemented step 1, the credit booster, so you're building on that foundation. Here's why Credit Builder loans are so powerful for your credit score. First, they add positive payment history, which is 35% of your credit score. Every on-time payment gets reported to all three credit bureaus. Second, they diversify your credit mix. Credit scoring models like to see that you can handle different types of credit, revolving credit like credit cards and installment credit like loans. Third, they establish a track record of managing debt responsibly over time. A single Credit Builder loan shows 12 or 24 months of consistent financial responsibility. And here's something important. Lenders love to see installment loan history. When you apply for a car loan or a mortgage later, they want to see that you've successfully paid off installment loans before. A Credit Builder loan gives you that history. Now, I know what some of you are thinking. This sounds great, but what if I miss a payment? Here's the thing. If you miss payments on a Credit Builder loan, it will hurt your credit score just like missing any other loan payment. But here's what makes credit builder loans safer than regular loans. If you absolutely can't make the payments, most lenders will let you access your deposited funds to cover the remaining balance. The key is to choose a monthly payment amount that fits comfortably in your budget. Don't stretch yourself too thin. It's better to get a smaller loan that you can easily afford than a larger one that stresses your finances. Where to find credit builder loans? All right, let's talk about where you can actually get these loans. You have several options, and I'll walk you through the pros and cons of each. Your best bet is usually a local credit union. Credit unions are member-owned, not-for-profit institutions, which means they can offer better terms and lower fees than some banks. However, most credit unions offer credit builder loans with interest rates between 6 and 12%, and many have no application fees. To join a credit union, you usually need to meet some membership requirement. Maybe you live in a certain area or work for a certain company or have a family member who's already a member. Here's what I recommend. Go to the National Credit Union Administration website and use their credit union locator tool. Enter your zip code and you'll see what credit unions you're eligible to join. Call a few of them and ask about their credit builder loan programs or go on their website and see what they offer. Community banks are another good option. These are smaller, locally owned banks that often have more flexible lending criteria than big national banks. They're more likely to work with you if you have limited credit history. The key with both credit unions and community banks is that they're focused on relationships. They want to help their members and customers succeed financially. If you can't find a good option locally, there are several reputable online lenders that offer credit builder loans. Self is probably the most well-known. They offer loans from $25 to $200 per month, and you can choose your own payment amount and loan term. Their loans are reported to all 3 credit bureaus. Credit Strong is another solid option. They focus specifically on credit building and offer loans with terms from 12 to 24 months. MoneyLion offers credit builder loans as part of their broader financial services. They also provide credit monitoring and financial education. There's also a newer option called Chime Credit Builder, which is technically a secured credit card, but works similar to a credit builder loan. You make payments into the account, and they report your payment history to credit bureaus. Now, here's what to watch out for when you're shopping for credit builder loans. Avoid any lender that asks for money upfront before approving your loan. Legitimate credit builder loans don't require upfront fees beyond maybe a small application fee. And stay away from any company that guarantees specific credit score increases. Nobody can guarantee how much your credit score will improve. And be cautious of lenders that don't report to all 3 credit bureaus. You want your positive payment history reported everywhere. The application process is usually pretty straightforward. You'll need to provide basic information like your name, address, social security number, and income information. Most lenders can approve you within a few business days. Remember, the goal here isn't to find the perfect credit builder loan, it's to find a good one that fits your budget and starts building that payment history. Even a small $500 loan can make a meaningful difference in your credit score over time. In our next module, we're going to talk about secured credit cards, which will add revolving credit to your credit profile and give you even more opportunities to build positive payment history. But first, take action on what we've covered, research your local credit unions and community banks, compare a few options, and get your credit builder loan application started. The sooner you start making those monthly payments, the sooner you'll start seeing your credit score improve. I'll see you in Module 3.